Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade for free. Type in the chat that you can hear me okay. I want to make sure my audio is working. Sometimes I've had problems with my microphone. Also, be sure to post any questions that you might have. I want to get to those questions before the end of the broadcast. So make sure you post the questions early enough to where I can get to those. All right, so how you doing, some guys? So hopefully you guys can hear me. Let me know in the chat. Now, uh, let's get to the earnings edge. So what happened last week with the earnings edge? I did not find anything that qualified. So what I do is I look for a stock that's coming into earnings next week. So for example, next week would be like the 5th of June. So I'm looking at those stocks, see if any of those are coming into earnings. And then also to make sure that they fit all the criteria and they fit through the filters. And last week, none of them fit through the filters. You can hear me okay. Thank you. I appreciate that. So because I didn't see anything fit through the filters, you can see that there's no new trade on the board. You can see the account value, $8,694. Now, I did put a spreadsheet together, and I remember last week the spreadsheet didn't kind of come through, but it looks like you guys can see it okay here, I think. And we can take a look at the results of the earnings edge. Now in 2022, you can see I started with $5,000. I got the account up 63% in 2022, but you can also see that I had a pretty good drawdown, peak to trough drawdown. Okay, so this wasn't just $5,000 and then drawdown. It started, the highest point it ever was $6,660, and it went down to $3,186. So peak, the highest peak to the lowest trough, down 69%. So if you trade this earnings edge, you know there's going to be some volatility. And then comparing that to the S&P 500, the S&P 500 started at 474 and ended at 382, so it was down 19.48% in 2022. Neil says you can see the spreadsheet this week. Yes, good. I'm glad you can see it. It was kind of a weird situation. I don't know why it wasn't showing up last week. Okay, and then 2023, you can see where the earnings edge is up 6.32%, and the S&P is up 9.75. So the S&P is doing pretty good this year, up 10%. But overall, since inception, you can see the earnings edge is up about 70%, and the S&P is down about 10%. So you can see that the earnings edge is outperforming in terms of returns, but when you take into account the volatility, you know, it just depends. If you want this kind of volatility, this kind of risk for this kind of return, then the earnings edge is for you. If you don't like a lot of risk, the earnings edge is not for you. But there is a link in the description for the earnings edge alerts, and that's I go ahead and trade. You can see the trades that I'm making, or I also decided to put the course, make the course available, because what happens with a course is you can create as many occurrences as you like. I only do 3 or 4 occurrences a month. So if you have the course, you can do as many occurrences that are available and get your occurrences up, and therefore you should be able to get your returns up based on my numbers anyways. Okay. Let's take a look at the Premier Level 5. So let me make sure I have this in order. So if you've got the Premier Level 5 here, you can see my account value, 35,529. So let's do that. I don't know if I did this on the last one, but 35,529. Sure that's done right. Okay, so with the earnings edge, you can see I started this on April 8th last year. I didn't start it at the beginning of the year. So these numbers are a little bit different with the S&P. So you can see you did 12.2%, and the S&P was down 39. And the drawdowns, these are very close to estimations because the way Thinkorswim does it, they don't really show you accurate drawdown numbers. But I'm just approximating that I drew down 5% where the S&P was down 24% peak to trough during that time frame. And then now you're looking at 2023, we're up 5.5, the S&P up 10.3. That should be 419.71. Let's see here. 419.71. That's the number there. Now the S&P probably moved, or this is SPY. SPY is at 421.82. Okay, yeah, so it did move up 421.82. Okay, it's up a little higher. Now, if you look at the overall return since April 8th, 2022, the Premier Level 5 is up 17.75, and the S&P since that time is up about 4%. And when you look at the drawdowns, down about 5, down 24, and then this year only down 2%, with the S&P peak to trough down 10%. So outperforming vastly in the drawdown category and outperforming vastly in the returns category. So vastly, the Premier Level 5 is outperforming the S&P 500 nicely. Now, what I like about the Premier Level 5 is we only make about maybe 3 to 4 trades a month. So it's really nice in terms of how much time that you put into it. Also, I have the Premier Level 5 in alerts program where you can see me trade it with my account and see when I make my moves. Or I also have the mastermind coming up, which is going to be starting in July, where I will actually teach you how to trade this system on your own. You won't need me. And that's in my mastermind program. And there's links in the description for everything that I'm talking about here for the alerts and for the mastermind program. Just check the link in the description of this video. Okay, let's get to the safe wheel. Let's see what the number is on the safe wheel as far as how much is in the account. Okay, looks like we're trading Uber. Got 62.67. Let me put that into the spreadsheet there. On the safe wheel, 62.67. You can see I started this in 2022, much like the earnings edge, with $5,000 and got the 21.7% return when the S&P was down 19.8. So vastly outperforming here. And then I went through, got my maximum peak to trough drawdown from peak here to trough down about 8. And then peak to trough for the S&P 500 in 2022 was 27%. And then when you look at 2023, you can see we're up 3, and the S&P is outperforming on a percentage basis. And it's about a 2-to-1 ratio about risk. So about half the risk here, down about 6%, down about 10%, and about 1/3 the reward. So the S&P is actually outperforming in 2023 from a risk-adjusted return. But when you take in 2022 and come all the way to present, the safe wheel is up 24.69. The S&P is down 10%. So since 2022 to present, safe wheel is vastly outperforming the S&P. And I think the safe wheel will outperform the S&P over the long haul, especially when you do risk-adjusted returns like this. Okay, so we have our numbers there. Let's see what we're going to do next. We're going to actually trade. So I am trading live. I am trading this account live. I don't make any other trades in this account except for on Fridays. Occasionally, I might sell a long call. So be sure to follow me on Twitter if you want to see if I do whatever move I make on Fridays with the safe wheel. Okay, so where are we with the safe wheel? Well, I own 100 shares, it looks like, of Uber at the price of $39.50. So last week I sold that $39.50 put and I got assigned. Okay, so I know I'm looking to do a covered call here if possible. And then I also have my put hedge. So the first thing I want to look at is my put hedge. Is this put hedge viable? Is it usable? Is it Am I going to still continue to use it? But the answer to that has already been answered. The answer is yes, because I'm in the stock. I'm in the stock, so I am going to keep this put hedge, or I'm going to roll this put hedge, and I'm going to stay in Uber no matter what, because I am in the, I own shares. Now, if I didn't own shares and I had to move this put hedge, I could just totally move out of Uber and go into a different stock. But I wouldn't say stuck, but I am in Uber no matter what, because I own 100 shares. So I'm going to look at the put hedge. So first question is it below 100 days? No, it's not. It's getting close, but it's still not below 100 days because I don't want the depreciation to be too fast. So this is good. And then is it close enough to the actual price of Uber? So the question there is, how close is it to Uber? So 30 divided by 38 would tell me the percentage. 30 divided by 38. So it's 78%. So it's within 70%, right? This put hedge is within 70% of the price of Uber. So it's good. I don't need to change it. So I know my put hedge is good. Now I know that I have this 100 shares at 39.50 and I want to sell a call against those shares. And I kind of have some rules around that, which is I want to get about 1%. Let's see if I can get that. I don't know if I can. Let's go to the trade tab. Now I want to, here's the problem or situation. Today's Tuesday, not Monday. So I'm going to get less premium. So I might accept less premium because it's Tuesday. Let's take a look at what it is. A little bit of an exception to the rule. So 39.50, you can see I only get 15 or 16 cents, which is not really enough. As I look at the safe wheel flow chart, and I look at the flow chart, so the stock was down and I got assigned. Okay, and then can I get 1%? And the answer is no. And then I look and see if the overall position is profitable. I have been tracking this position in OptionNet Explorer. Let me see if I can pull that up to see if the overall position is profitable. Let's see here. Let me get into it on the safe wheel and see if I can use this tool like I wanted to, but we'll see how it looks. Uber, right? Okay, so I'm looking at, it's kind of hard to see because of the way I have the settings, but you can see it looks like the overall position is down about $62. So I've been tracking this in OptionNet Explorer. Let's see, let me make sure here. Add a stock. Yeah, so these are the positions that I have left right now. And ever since I started this particular cycle, I've been tracking it here in OptionNet Explorer. You don't really need to do this. I mean, there's other ways to do it, but you can see that the position is actually down since I opened it. Okay, so that answers that question. So looking at the chart, is the overall position profitable? No. Can I add a tier 2, or do I need to add a tier 2? I do, because I can't sell this for the premium that I want, which is around $39. And so I don't want to sell something below. Right here, say I did a $39. Say I sold a $39 call. I could potentially lose money if I get if that stock, if I lose that stock and gets assigned, I would lose money. So I don't want to sell something lower than what my break even is or cost basis is. So I'm going to go to add a tier 2. So I'm actually going to add another put. So I'm going to sell another put. And I want to make sure it's out of the money. So we're at 37.80. And I want to get 1%. So this isn't quite 1% here. So I'm going to sell the 37.50 put. And I'm going to do one of those. I have between $5,000 and $10,000. So I do one of these and 3 put hedges. I already have my put hedge on, so I'm going to do one of the 37.50 put in the near term. The mid price is 48. Might try to get 49. I probably won't. Nah, 48. Okay, so I got $48 there. So now I'm in the second tier. Now I want to protect this put hedge still, even though I am long 100 shares, and I know those shares would protect it. I'm still going to go ahead and protect it. So I would pay $6, but not 7. So it looks like the 41s. I'm going to buy one of the 41s and probably get it for $5. Okay. So I've got my protection of my put hedge. Now on Friday, I'm going to go in and look and see if Uber is over $41 late in the day. And if it is, I'm going to sell this call. I don't want this to expire in the money over the weekend. Okay. So that is what's going on with that. And now I'm going to record this into OptionNet Explorer later. That way I can always look at the overall position, see if it's profitable. Let's see here. Again, if you want to see what I do with this $41 call, make sure you're following me on Twitter at Carl Dom. There's a link in the description there. All right, let me get into the questions if there are any. Yeah, looks like there might be. M4CH. Let's see. Hi, Carl. Wanted to ask how you handle the situation where you're. Let me make sure my audio is working. Yeah, that's okay. I wanted to ask how you handle a situation where your put hedge has 116 DTE, but it's also below the 70% strike price. Do you close a position or still roll it up first and close it later? So I will replace it. So I would roll it. I'll replace that. And yeah, will I go back to the 116 DTE? I guess that's your question. I would probably go further out. I would replace the whole thing and start over. Now, if you don't own 100 shares, you could technically choose a new stock and just start everything over from scratch. You're actually starting a new cycle at that point. So I would move it out to the, what are we looking at, 150 DTE to put the put hedge. So I would roll it closer to the money, and I would roll it out further in time and start over. That's what I would do. Neil says we can see the spreadsheet this week. Yeah, kind of weird how last week, whenever I brought anything into the actual screen, it didn't show up, but this week it is. So it kind of, this week makes sense to me. Last week didn't make sense to me as far as how this system was working. Audio is clear and great. Nice spreadsheet. Thanks. I appreciate that. Spreadsheet makes my life so much easier. It used to take me like maybe 10 to 15 minutes to prepare for the live stream. Now I just throw the spreadsheet over there and really don't have to prepare much at all. All I do is just punch in the number. So I like that a lot. Less is more. On shortened weeks, such as this one, do you adjust your... Yeah, I do. I mean, I would have taken, so what was I looking for? 40 cents? I would have taken 30 cents. I don't have an exact number, but I would have taken a pretty good, I would prefer to take premium rather than start a second tier 2. But it looks like that the premium was a little bit too low. Is that 15 cents? Maybe even 25, 30 cents. I probably would have done that instead, considering it's a short week. Will, so earnings edge trade is a week long. Is it ever 2 weeks or more? No, it's typically I'll look at the earnings edge on a Monday, Tuesday, or a Wednesday. So I might open on a Monday, I might open on Tuesday, I might open on a Wednesday. I will not open on a Thursday. I won't open on a Friday. And then I will close it. If it makes me money early, I'll get out early. But if it doesn't make me money, or it's not a lot of money, or it's a loss, I'll take my loss on Friday. So I might open on Monday, close on Friday, open on Tuesday, close on Friday, open on Wednesday, close on Friday. Those are the typical things that happen. And that's how long I would hold it. Less is more on a shortened week, such as this week. Do you lower the hurdle for the car? Yes. Yes. I think that's the same question you asked earlier. Okay. He says Uber. I guess you're trading Uber, and you say it's break even for you. Yeah. Yeah, we're around there. Now, it looked like I was down a couple $100 based on OptionNet Explorer. That may not be the best way to track it. I'll take a look at that in detail at some point. Some guy, can you go out an extra week for selling the call on Uber? I can. I mean, you can alter the rules any way you like. It's just not part of the rule set because I try to collect as much. I want to get that depreciating theta, and that is the near term stuff. So that's the juiciest stuff because it will depreciate the fastest. So I try to stay within the 1 week. I don't want to go out another week. You could, though, if you wanted to do that, that's not a bad idea. But make sure you back test it. Because you want to do very consistently the same thing over and over. That way your back tests are true to what you're doing, and you can have an expected return, and things don't, everything works out as expected. So you want to follow some hard rules. Says thanks. M4 says, I did not get assigned and just closed the hedge. Oh, TQQQ, and open a new one in U. Okay, so make sure your sizing is done properly. So the reason why I use stocks between $20 and $40 is because when I have $5,000 to $10,000 to deal with, I've done the sizing properly, and I do a 3-to-1 ratio. And when you start getting into other underlyings and they don't have the price between 20 and 40, you're going to have to calculate your size properly, and it's probably symmetrical to what I'm doing. So if you had a stock between 40 and 60, you might do 2 and 6. But I didn't backtest that, so I'm not 100% sure about it. So if you want to go outside the rules, make sure you backtest it. I really like the live update of the spreadsheet. Very helpful. Great. I appreciate that. I think it's a lot better rather than just stating it and talking numbers. I think if you see them visually, yeah, I think it's better that way. And so that's one of the reasons why I put the spreadsheet together. The other reason is to make my life easier too. Okay, I don't see, let's see if I don't see any more questions or comments. I know there's like probably a 5-second delay, so maybe something will come in here in the next few seconds. Yeah, there's something. Got it. Both tickers are between 20 and 40. Okay, great. Yeah, then you're good to go. And then, as long as it meets the other 6 criteria that I have lined out, then my back test should apply. I mean, you can use your own criteria. That doesn't mean that, what you're doing is wrong. It just means that my back test will most likely apply to what you're doing if you follow my criteria. And that's why I recommend following the criteria that I have laid out. Some guy, is backtesting options tricky? No, I have, if you go through my archives, you'll see where I give examples of how to do backtests on OptionNet Explorer. There's a back testing on this Thinkorswim, but it's real antiquated and doesn't really work that well. You can't really keep the reports. You can't really look it over what happened. You can't really save it. So it's not really that good. It's possible to do it, but it's really kind of low tech. That's why OptionNet Explorer is really good, because whenever you do a back test, it's there, forever. You can just go back and look at it again and again. You can look at it from all different angles, and it's just better to use that type of software, even though it does kind of cost some money to get it. But if you're trading with a decent size sum of money and you're trading options, then I highly recommend OptionNet Explorer. Yeah, so the best way, so some guy, yeah, the best way of doing backtest is OptionNet Explorer. And also, let's say you decide you want to do the safe wheel and you want to backtest it. When you backtest it through a few years, you're going to become like an expert at it. I mean, this is really the best way to become like really, really good at trading is to backtest using OptionNet Explorer, because you get really, really good at that particular trade, whatever you're backtesting, you know it in and out. So you're getting real comfortable with it. So that's kind of the main advantage to backtesting. Even though you do see the results and you get all the results and you can see it from different angles, I mean, the more important thing is you actually learn that trade in and out. And so that's the advantage to backtesting. Okay, well, I don't see any more questions or comments, and I'm going to go ahead and wrap this up. I will be back next week, of course, and I appreciate you guys, and we'll see you on the next one. Oh, hold on a second. One thing I always like to say, if the P&L is not real, what else are they trying to conceal?